Ladies and gentlemen, good day and welcome to the Q4 FY22 earnings conference call of Sun Pharmaceutical Industries Limited. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nimish Desai, Head of Investor Relations. Thank you, and over to you, sir.
Thank you. Good evening and a warm welcome to our fourth quarter FY22 earnings call. I'm Nimish from the Sun Pharma Investor Relations team. We hope you received the Q4 financials and the press release that was sent out earlier in the day. These are also available on our website. We have with us Mr. Dilip Shanghvi, Managing Director, Mr. C.S. Muralidharan, CFO, Mr. Abhay Gandhi, CEO of North America, and Mr. Kirti Ganorkar, CEO of India Business. Today the team will discuss performance highlights, update on strategies, and respond to any questions that you may have. As is usual, for ease of discussion, we will look at consolidated financials. Just as a reminder, this call is being recorded and a replay will be available for the next few days. Call transcript will also be put up on our website shortly. The discussion today might include certain forward-looking statements, and this must be viewed in conjunction with the risks that our business faces. You are requested to ask 2 questions in the initial round. If you have more questions, you are requested to rejoin the queue. I also request all of you to kindly send in your questions that may remain unanswered today. I will now hand over the call to Mr. Shanghvi.
Thank you, Nimish. Welcome and thank you for joining us for this earnings call after the announcement of financial results for the fourth quarter and full year FY22. I hope you and your family are doing well. Let me discuss some of the key highlights. FY22 was a good year for us with consolidated top line growing by about 15.6% to rupees 384,264 million and a EBITDA growth of 23.6% and adjusted net profit growth of 29%. All geographies have done well and have recorded double-digit growth for the year. For the FY22 fourth quarter, consolidated revenues were 93,861 million, recording a growth of about 11% year-on-year, driven by strong performance across markets. Branded formulation revenues in India and emerging markets together now account for about 50% of our global consolidated revenues. Let me now update you on our global specialty business. We've done well in the specialty business over the past few years. Global specialty revenues contribution has nearly doubled from about 7% in FY18 to about 13% in FY22. In FY22, we've recorded a strong ramp up in our specialty sales, which were up by 39% to reach $674 million. We've seen a strong traction in global ILUMYA sales for the year, which were up by about 81% to $315 million. This figure does not include about $100 million of ILUMETRI end market sales. During the year, we added Winlevi to our portfolio, which was commercialized in the US in November 21. We continued our efforts to take our specialty portfolio global with Ilumya launch and Sequa also in Canada. For Q4 22, global specialty sales were 185 million, up by about 30% over last year. Specialty R&D accounted for approximately 20% of our total R&D spend for the quarter. Abhay will give you more details on the specialty business later. I will now hand over the call to Murli for discussion of the financial performance.
Thank you, Mr. Shanghvi. Good evening, everyone, and welcome to all of you. Our full year and Q4 financials are already with you. As usual, we will look at key consolidated financials. I'm happy to report that our top line for FY22 has crossed the $5 billion mark, while the net profits has crossed $1 billion. The full year FY22 sales were at rupees 384,264 million, a growth of 15.6% over FY21. Staff cost stands at 19% of revenues, lower than last year. However, in absolute terms, the staff cost has increased on account of annual merit increases. Other expenses were at 28% of revenues, marginally lower than last year. However, in absolute terms, the other expenses increased on account of higher selling, distribution, traveling expenses, while in FY21, these expenses were lower on account of pandemic-related restrictions across markets. Forex gain for the year was rupees 1,540 million compared to rupees 237 million FY21. EBITDA for the full year was at rupees 1,697 million, a growth of 23.6% over the same period last year, with EBITDA margin of 26.5% compared to 24.8% year on year. EBITDA margins have expanded by about 170 bps to a 26.4%, driven by operational efficiencies and cost management. Margins have expanded despite input cost pressures and normalization of branding, promotional, and travel expenses. Excluding the exceptional items and non-recurring tax credit for both FY21 and FY22, the adjusted net profit for FY22 was at rupees 76,671 million, up by about 29% year on year, crossing the $1 billion mark. Reported net profit for FY22 was at rupees 32,727 million. The company has repaid debt of about $355 million in current fiscal. Over the last 3 years, the company has repaid debt of about $1.38 billion. As of 31st March 2022, at the ex-Taro level, the net cash stands at $713 million. At the consolidated level, including Taro, the company has a net cash of about $2 billion. Our focus on improving return ratios is yielding results, with ROC improving by about 288 bps to 16.4% compared to FY21, return on invested capital by 306 bps to 21%, and return on equity has improved by 256 bps to 15%. Let me discuss the Q4 FY22 performance. Q4 sales are at 93,861 million, up by about 11% over Q4 last year. Material cost as a percentage of revenues was 27.1%. Staff cost was up 12.4% year on year and stands at 20.1% of revenues. Other expenses were up 11.7% year on year and stands at 30.3% of revenues. Forex gain for the quarter was rupees 1,610 million compared to a loss of rupees 108 million for Q4 last year. EBITDA for Q4 was at rupees 22,797 million, up by 14.6% year on year, with resulting EBITDA margin at 24.3% compared to 23.5% for Q4 last year. Excluding the impact of exceptional items and related deferred tax The adjusted net profit for the quarter was at rupees 15,817 million, up by about 18% over the adjusted net profit of Q4 last year. Reported net loss for Q4 was at rupees 22,772 million, including the exceptional charge of rupees 39,358 million. The adjusted EPS for the quarter was rupees 6.60. Let me now briefly discuss Taro's performance. Taro posted Q4 FY22 revenues of $143 million and adjusted net profit of about $27.4 billion, lower by 3.4% and 11.6% respectively over Q4 FY21. For the full year FY22, revenues were at $561 million, up 2.3% year on year, and adjusted net profit was at rupees 126.4 million, lower by about 10.6%. In February 2022, Taro acquired Alchemy, formerly the Proactive company from Galderma. The acquisition includes Alchemy's business and assets worldwide, including the Proactive brand for acne treatment. I will now hand over to Mr. Kirti Ganorkar, who will share the performance of our India business.
Thank you, Murli. Let me take you through the performance of our India business. Our India formulation sales for the full year financial 22 were rupees 1,27,593 million, recording a strong 23.4% growth over previous year. Even if we exclude the contribution of COVID products, the underlying business has performed well with about 20% growth over the previous year. For Q4, formulation revenues in India were 30,956 million, recording a growth of about 16% over Q4 last year. Contribution from COVID product was negligible at about 1% of India sales for the quarter. India business accounted for about 33% of consolidated revenues for Q4. We have maintained the trend of the past few quarters of outperforming the average industry growth, which has led to increase in our overall market share. As per AIOCD AWACS data, our market share has been gradually increasing over the past few quarters. For Q4, it was at 8.86% compared to 8.59% for Q3. On a MAT basis, as per AIOCD AWACS data for March 22, our market share was 8.34%. We have witnessed growth across most of our therapy areas. The growth was driven by a combination of factors like normalized market condition and improved patient flow to doctors' clinics, which led to higher growth in chronic and semi-chronic segments. New products are also contributed to the growth, and we are seeing good momentum in new product launched in last 24 months. For Q4, we launched 11 new products in the Indian market. Field force operation were near to normal in Q4 with almost all doctors' clinics operational. The productivity of the new field force continues to improve. Travel costs for medical representatives was near to normal, while we continue to see some saving in terms of the cost of medical conferences. The field force expansion done in financial year 21 has made with a good success, and considering the current market conditions, we will be undertaking a further expansion of about 10% of our field force in the financial year 23, driven by twin objective of brand focus and geographical expansions. Sun Pharma is the largest pharmaceutical company in India, and as per SMSRC report, we are number one ranked by prescription with 11 different doctor categories. I will now hand over the call to Abhay.
Thank you, Kirti. I will briefly discuss the performance highlights of our U.S. businesses. Our overall U.S. business grew by 12% to $1,526 million full year FY22, driven mainly by the strong performance of our specialty business. Global Ilumya sales, coupled with Ilumetri end market sales, are now nearing the $500 million mark. For Q4, our overall formulation revenues in the U.S. grew by about 5% over Q4 last year to about $389 million. The main driver of growth again was the specialty business, which grew 24% year-on-year. US accounted for about 31% of consolidated revenues for the quarter. Q4 witnessed a large number of Omicron-related cases in the US. While doctors' clinics were open in the US during the quarter, the patient flow to doctors' clinic as well as frequency of doctor calls by our medical reps are both still below pre-COVID levels. Our specialty revenues in US have grown over Q4 last year, mainly driven by Ilumya, Cequa, and Odomzo. This is despite the decline in Absorica sales due to the entry of generics. Winlevi continues to generate significant interest amongst dermatologists as a new treatment option for acne. Till date, over 9,000 doctors have prescribed Winlevi. Our established presence in the dermatology market will help in ramping up Winlevi going forward. We will not be able to share more details on Winlevi on this call. Let me now update you on our US generics business. While the US generic business continues to be competitive, the Sun ex-Taro generics business has grown for the full year FY22. While we do experience price erosion, we have been able to counter it by a combination of new launches and better supply chain management. In Q4, we launched 5 new generic products in the US market. In terms of complex generics, we have commercialized generic amphotericin B in the US market. We also recently launched generic mesalamine extended release capsules in the US. I will now hand over the call to Mr. Shankar.
Thank you, Abhay. I will briefly discuss the performance highlights of our other businesses as well as give you an update on our R&D initiatives. Our branded formulation revenues in emerging markets were at about $905 million for the full year, up by about 16% year-on-year. For Q4, sales in emerging markets were about $206 million, up by 7% over Q4 last year. The underlying growth in constant currency terms was about 10% year-on-year for Q4. Emerging markets accounted for about 17% of total consolidated revenues for Q4. Amongst the larger markets in local currency terms, Russia has grown by 43%, Romania by 18%, and Brazil by 32%. As of now, we have not witnessed any major impact of the geopolitical issues on our operations in Russia. Our presence in Ukraine is very small. For the full year, formulation revenues in rest of the world market, excluding US and emerging markets, were about $732 million, up by about 11% over last year. For Q4, rest of the world sales were $178 million, up by about 7% over Q4 last year. Rest of the world markets accounted for approximately 14% of consolidated Q4 revenues. API revenues for Q4 were at rupees 4,137 million, lower by around 5% over the Q4 last year. We continue to invest in building a R&D pipeline for both the global generics and the specialty businesses. R&D efforts are ongoing for the US, emerging markets, ROW markets, and for India. Consolidated R&D investment for Q4 were at rupees 5,433 million compared to 5,571 million for Q4 last year. Our current generic pipeline for the US market includes 93 ANDAs and 13 NDAs awaiting approval with the US FDA. Our specialty R&D pipeline includes 4 molecules undergoing clinical trials. ILUMYA is undergoing a phase 3 trial for psoriatic arthritis, while SCD-044, an oral dermatology product, is in phase 2 trials for psoriasis and atopic dermatitis. MM2 is also in phase 2 trial for treatment of pain in osteoarthritis. Our GLP-1 agonist, GL0034, is undergoing phase 1 trial for type 2 diabetes. The board has proposed a final dividend of rupees 3 per share for the year FY22. This is in addition to the interim dividend of rupees 7 per share paid in FY22, taking the total dividend for FY22 to rupees 10 per share compared to rupees 7.5 per share for FY21. Recently, our Halol factory underwent a CGMP inspection by the US FDA. Post the completion of inspection, US FDA issued 10 observations. We will be filing our response to the FDA on the corrective actions to be undertaken for addressing these observations within the stipulated time. We will not be able to disclose further information on Halol as of now. And lastly, on the guidance for FY23, we expect high single-digit to low double-digit consolidated top-line growth for FY23. All our businesses are positioned for growth. Ramp up in our global specialty business is expected to continue. As indicated in our previous calls, overall expenses are inching up as markets across the world normalize. R&D investments is expected to be between 7 to 8% of sales next year. With this, I would like to leave the floor open for questions. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Tarang Agarwal from Old Bridge Capital. Please go ahead.
Hello, sir. Good evening. Just wanted to check.
Sir, if you can speak closer to the handset, please. Your voice is not audible.
Hello. 2 questions from me. The first one, there was a settlement that was undertaken in this quarter, and similarly, some settlements were undertaken in the previous year as well. How should we see this going forward? Are there any further settlements that are anticipated? That's number 1. Number 2, is the specialty business as a SBU now breaking even on cash flow basis?
So all the ongoing litigations have been disclosed by the company in the annual report, as well as have been disclosed by us in the past. So I think it will help you in understanding what are the potential. We believe that we have strong case for all the residual cases. However, all of this depends finally on the way in which the litigation progresses. We feel reasonably comfortable that we should be able to do quite well in these litigations. What was the second question? We don't give out the business-wise specific profitability numbers. But I think, as you see, we've grown that business quite well, and the business continues to grow well. So, and I think that's important for that business to become an increasingly more important component of our overall business.
Okay. Thank you.
Thank you.
Thank you. The next question is from the line of Neha Manpuria from Bank of America. Please go ahead.
Thank you for taking my question. My first question is on the specialty business. It seems to be a flat number quarter on quarter, and if I remember correctly, in the last quarter it mentioned there's very little contribution from Winlevi. So if you could just give us some color in terms of, despite the contribution, what's driving the flattish number?
So two reasons. One is the period itself, because as you know, Jan and Feb are when the insurance reset, and that's always a little lower month for the total business. So that is one reason. Another is the declining sales of Absorica post-launch of the generics. Overall, when I look at the prescription trends of the products, I'm reasonably comfortable with what I'm seeing.
Abhay, but wouldn't Absorica pretty much be there in the December quarter? I mean, yes, there could have been some erosion quarter on quarter, but wouldn't the Ilumya ramp up and Winlevi more than made up for it?
So we had certain strategies in place to have a slower decline of Absorica. So therefore, post-launch of generics, the decline of Absorica was not rapid, but it was gradual. So it took a couple of quarters for the product to reach to where it is today.
Understood. And in terms of Winlevi, are our promotions on the product still ongoing? And what's the feedback that you've got from doctors? Could this product be larger than Ilumya for us in the US?
So I think larger than Ilumya would be a stretch, Neha, to be very honest, because of the different price points. I mean, in terms of number of prescriptions, it is anywhere larger than Ilumya even today. But the value of prescription will be very different from what you get for Ilumya. So in dollar terms, the answer would be a no. But to give you a sense of how the product is performing in market, I mean, acne, depending on what data set you look at, approximately 15,000 doctors are regular users of acne products, all kinds, whether it's brands or generics. And in 5 months, 9,000 have at least used the product once. So that tells you something about the interest created by the product, the impact of promotion, and the real need in the market for a new solution. Our hope is to capitalize on that and to make this into a meaningful product for the specialty business going forward.
Understood. Kirti sir, on the India business, we have announced another expansion. Will this allow us to continue the outperformance, and where are we adding this field force? Is there particular therapies that we're looking at adding the field force?
Sure. I think the field, as I said, we are doing two things. Geographically, we are expanding, so this field force is added across a couple of BUs, certain BUs. And what we see, our idea is to declutter our current portfolio, so there is a space for each of the business unit to promote the specific product to the doctors, and at the same time cover the geographies which has not been covered by us in the past. So that would help us. I think the objective for India business is to grow faster than the market and gain a market share.
Understood. Thank you so much, sir.
Thank you. The next question is from the line of Damayanti Kerai from HSBC Securities and Capital Markets. Please go ahead.
Hi, thank you for the opportunity. My question is regarding study of Ilumya in psoriatic arthritis. So, when you are likely expecting to finish the phase 3 trial and file for the product?
So I think we are reassessing the study timeline and study completion date. The what you call COVID and subsequent disruption of the doctors attending their clinic, and also now the some of the sites being in Russia as well as in Ukraine have disrupted the speed of recruitment. So we are recalibrating and also thinking through what is the best option for us to find replacement for sites that we are unable to support. So our objective would be to find a way to file the study at the earliest.
Okay, and a related question for Ilumya will be, are you looking to start clinical trials in other indications, or first you will finish this and then might look at other indications?
I think we will first, of course, do a much more comprehensive commercial assessment and the potential return on investment if we have to do any further development, because we don't have significant presence in any other therapy area. So we not only will have to spend significant amount of money for the studies, but also then create a field force and sustain cost for that expansion. So we have to, what you call, do this carefully.
Sure. And my last question is on the spend for specialty products, both in terms of marketing as well as any like R&D spend, which we might be incurring in near term. So maybe some update on how we should look at specialty spend in next 1 or 2 years.
Okay, would you like to?
So for the larger product size, I mentioned on the last call itself, Ilumya or Cequa, which we have been in market now for anywhere from 3 to 4 years. The spend is more or less optimized when we look at growing the business without necessarily increasing the cost base or the promotional spend. On the other hand, we can look at a Winlevi, which is a product which is new to market, then I think we are going to be spending sufficiently to be able to optimize our asset there. So it's a combination of the two that I would look at when I run the business.
So very broadly, with like optimized cost for Ilumya and Cequa and spend going towards relatively new launches, it should be on an upward trend, but on a more measured basis. Could we assume?
Not very, yeah, it'll be upward, but not very significant upward.
Okay. Thank you. I'll get back in the queue.
Thank you.
Thank you. The next question is from the line of Kunal Dhamesha from Macquarie. Please go ahead.
Good evening, and thank you for taking the question. First on the R&D, so we are expecting at the midpoint of our guidance a significant jump from 5.5 to roughly 7.5. So what would be the major driver of this 200 bits? I can understand, what would be the split between maybe specialty and generic for that 200 additional bits?
No, I think we expect the clinical trials to pick up in this year so that we can complete or we can progress with the clinical studies rapidly. And that essentially is the key reason for subdued spend last year. We significantly underspent over our guidance last year. And a key reason was underspent on account of clinical studies that could not recruit enough patients.
So would it be fair to say that as and when it comes, it would be more lumpy in nature?
What would you mean by lumpy? Say in some
so let's
quarters.
say, Yeah. So let's say maybe, till we are recalibrating our, psoriatic arthritis phase 3 trial, till we are not clear on our strategy, we will not execute it. So, maybe next couple of quarters till we are recalibrating, it might be subdued, and then once we are, full throttle on the trial, it can jump. Is it
so I think you should look at annual numbers rather than looking at quarter. So there will always be certain amount of lumpiness in the clinical trial spend.
Sure. Thank you. And second question, just on the logistic question on Ilumya, I feel I'm missing something. So global Ilumya sales, we have said it's roughly 315 million, which has grown at 81%. But as far as I remember, last year global Ilumya sales was roughly 143 million. So by that, accounted, the growth should be more than 100%. What am I missing here?
So the FY22 number is the total revenue from customer contracts that includes product sales, royalty, and milestone, which was already disclosed in our Q2 FY22 results.
So 315 includes the milestone payments.
Royalty and milestone, which we have disclosed in the Q2 FY22 results.
So, but still the growth number doesn't make sense, right? I mean, 143 and 315. Why is it 81%? So 81% is without milestone payment, is what you are trying to say?
Yeah. So, this is Nimish here. Kunal, this is Nimish here. Let me explain. So, when we include royalty and milestone on Ilumya in the 315 number for FY22, correspondingly for FY21 also, those equivalent numbers have been included. So the base is also on a like-to-like basis. And that is why
so it would be 175.
Sorry?
It would be 175 then if I have to match the growth number for FY21 number.
Yes. So what we have given you as growth is a like-to-like comparison. Otherwise, we would have ended up giving you something which is not comparable. So that's why we have given you the growth number.
Okay. I think I'll have to get back in get in touch offline to understand it. Yeah. Thanks.
Thank you. The next question is from the line of Krish Mehta from Enam Holdings. Please go ahead.
Hi, thank you for taking my questions and congratulations on the specialty performance for the year. The first question I had was on note 4, subsection D, where we've taken, I think, a 563.5 million rupee charge in relation to restructuring of operations. So could you throw some light on which geographies we saw this restructuring and if Russia has been a key part of this and whether this is going to be an exceptional that we might see in the future given the dynamic situation geopolitically?
So this what we disclosed in one page of the notes is related to the Western Europe region, certain geography restructuring we've done.
Right.
Is there any other follow-up from your end?
Yeah. The follow-up for this is the second one is on the cash position of the company. Given the net cash position we've built, how do you see the capital allocation going forward in terms of acquisitions or buybacks or like dividend payouts?
No, I don't think that we can. I mean, some of this, of course, we also don't know. But also, I think we don't forecast those numbers.
Okay, thank you so much.
We've kept the dividend payout at 30+% of the profit.
Okay, thank you so much.
Thank you.
Thank you. The next question is from the line of Bino Parthi Parampil from InCred Capital. Please go ahead.
Hi. Good evening, all. A lot of questions answered, just a couple of them. If I believe the Proactive brand was acquired by Taro last quarter and it closed around somewhere in Feb. So is a month or month and a half of Proactive revenues included in Taro top line? Sorry, I couldn't hear that.
No, we couldn't understand. What was the question?
Taro acquired the Proactive brand sometime in last quarter, and I believe that closed around sometime in Feb. So what I would like to know is whether there is some revenues from Proactive which is included in Taro top line.
As we spoke with Taro, the transaction is closed till end of Feb, so hardly 1 month revenue.
So sorry to interrupt. Your audio is not clearly audible. May we request you to speak closer to the device, please?
Yeah. So as you have said, the Proactive alchemy related acquisition got completed end of Feb. They have 1 month of revenue, but not very material is built in the quarter financials.
Okay. And could you give some idea about generic Revlimid launch? Are you expecting to launch in the second wave, which is coming in soon?
I couldn't understand the question again. What is it that you're trying to ask?
Generic Revlimid launch in the US. So could you give some idea? Are you looking forward to launch it along with the others in the second wave of generic entry?
So we have an agreement, and we haven't disclosed the terms of the agreement, and we will follow that. Like many other companies, there have been different timelines set for when we can launch. So it will be as per that, and once we launch, we will, of course, let you know.
Okay, great. But you won't be able to comment whether it's this calendar year, financial year, or anything like that?
No, I think it is better that we don't, because let us follow the process that is set out in the agreement that we have.
Okay, great. Thank you.
Thank you. The next question is from the line of Sameer Baisiwala from Morgan Stanley. Please go ahead.
Thank you so much, and good evening, everyone. A quick one on Winlevi. You got a very nice prescription, support from doctors. Is it equally well supported on the insurance coverage side? And, what happens to those prescriptions which are not covered, under plans?
So, Sameer, as you know, it's 5 months since launch. So as far as insurance support is concerned, it is work in progress. We are meeting with each one of them, sequentially explaining the story, using key doctors to also explain why insurance companies should cover. So yeah, it's work in progress. To the latter part of your question, that what happens if the coverage is not there, and like every specialty product when we launch too, we have a copay program which reduces the burden on the patient, and that gets the doctors into using the product frequently and get into the habit. And the number of prescriptions that we generate, which, as you said, looks nice, also becomes then a factor why insurers should try and cover a product. So it's a combination of all these, and definitely work in progress and an agenda for the team on the ground.
Yeah, thanks, Abhay. Very helpful. And second question is on Ilumya. Good showing with 315 million sales, and including Europe 420 or something. So where is Ilumya in your view in its product life cycle? Do you think it can continue to grow, well over next 2 to 4 or 5 years, or how are you thinking about it?
In my head, it's still in the growth phase. That's the direct answer to your question. So we believe that there is still a lot more to be done for the product and a lot more headroom for the brand to do well.
Okay, excellent. And just if I can ask about the Alchemy acquisition by Taro. If one reads about this product Proactive, so it has had quite a history. and the sales has been declining over last 7-8 years, and actually it was declining even say 40% all the way to 2021. So is it possible for you to share your thinking, what you want to do with this asset? What's the term plan? What's the strategic thinking behind it?
No, Samir, we cannot share unless and until Taro shares with their shareholder. I mean, of course, the macro objective for all acquisition would be that it will help the business add both top line as well as bottom line, and also help grow on a consistent basis.
Okay, no, that's fair enough. Yeah. Thank you so much.
Thank you.
Thank you. The next question is from the line of Surya Patra from Phillip Capital. Please go ahead.
Well, thank you for this opportunity. So just on the cost front, I missed that commentary.
Mr. Patra, sorry, but your audio is not clearly audible, so may we request you to move to answer mode, please.
Hello. Is it fine?
Yes, sir, please proceed.
Yeah. So just on the cost side, is it possible to have a sense? I possibly missed that in the initial remarks. The sequential kind of cost impact what we have seen in the fourth quarter versus the previous quarter. What had led to this kind of incremental cost pressure impacting our margin? That is the first question. And the related aspect is that, let's say for FY23, if we need to be concerned or cautious about certain cost items, then considering, let's say, 200 basis point kind of expansion in the R&D spend side, or people cost, which could also be seen because back-to-back 2 year of field force expansion to the tune of around 10%, and even the elevated, otherwise challenging cost scenario what we are witnessing for all the industry. So given this, what were the reason for the kind of sequential impact, and what outlook that one should really have about cost for next year?
So in terms of the cost, what I want to share is that these are normal increases as operations are normalized, which we also shared in the earlier earnings call.
Okay. Anything about next year? Are you really are you worried about the rising cost trend what we are witnessing in all the cost line items? So anything that you think which can counter those easily to sustain the margin profile?
No, I think hopefully we should be able to offset some of the cost increases with our ability to take price increase in the marketplace. So we are not guiding for any significant change in the cost of goods at this point of time. If situation changes, it may happen. But as on today, that's the thinking.
Sure, sir. So my second question is on the growth guidance of high single digit kind of growth for the full year. So in that, whether we have considered Revlimid launch as well as any M&A scope in that, or it is a core existing running business growth guidance that you have indicated?
No, I think it's after factoring all potential, what you call price erosion as well as new product launches in the regulated market, as well as in India where we have to grow when we don't expect any significant amount of COVID sales. So to that extent, we expect India businesses to get adjusted for that growth. So it's factoring all of that.
Okay. Just last one question, sir, on the domestic business front. So this 10% kind of expansion field force, is it to counter the competition which is now becoming aggressive in the post-COVID period, and the entire industry is talking about expansion of their field force, or it is to focus more on the organic growth rather than the industry which is now looking for more of M&A-led growth in the domestic market?
In my opinion, it's more like organic growth. So what we are looking at, as I said earlier, is we are expanding to geographies where we had a limited presence or no presence. So it's nothing to say like we are looking at competition and then expanding. So wherever we are seeing a growth opportunities in the territories, there we are expanding. And second important point is also we have a large product portfolio, and which also we need to declutter. That's why we are expanding in terms of number of MRs as well as in terms of number of business units which are promoting product to the doctors. So it's more our strategy to grow in the future. Yeah.
Yeah, thank you. Wish you all the best.
Thank you.
Thank you. The next question is from the line of Deep Master from One Up Financial Consultant. Please go ahead.
Yeah, hi. Thanks for the opportunity. I just really had one question on the specialty business strategy over the medium term. So now that we've seen good initial signs of the business stabilizing and seen signs of your initial success, how are you kind of thinking about the medium term sort of growth formula in a sense, if I may call it that? Your product portfolio will continue kind of growing at its own pace, but how should we think about new additions? Both from your internal pipeline as well as acquisitions. Is there a number that we could kind of expect, say 1 or 2 every year? How could we think about it?
I wish there were those numbers. But here, if I look at it from a medium to long-term perspective, I think growth will be driven by a combination of organically growing the products that we have, whereas I feel that most of them are in growth phase, leaving us enough headroom to continue the growth trajectory.
Yes.
And of course, keeping your eyes open for any opportunities to look at products. And having the cash in the bank, which in the readout also we have mentioned, helps us to look at these assets very aggressively, without of course overpaying for it. But we keep looking. Winlevy is an example, but
of course
I don't have a number in mind whether it will be 1 or 2 or what it is.
Right, and in terms of a therapy focus, would it kind of would derma be top of the list and then sort of it followed by ophthalmology, or how could we look at maybe a therapy focus or strategy for the portfolio?
So without categorizing it as top of the list, I mean the 2 segments we want to grow are dermatology and ophthalmology clearly, and in related oncology areas too, which are derm focused, we keep looking at ways to grow the business. So it's not one over the other. Idea is to try and grow both these franchises.
Understood. Great. Thank you. All the best.
Thank you. Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Kunal Dhamesha from Macquarie. Please go ahead.
Thanks for the follow-up. So just an overarching question on Ilumya, what kind of insurance coverage progress we would have made over the, let's say, last 2 years, from the perspective of whether we have been able to reduce the step therapy kind of provision, or the number of lives that are covered by the insurance which are covering Ilumya. A broad overview of how that has panned out would be helpful.
So right from the launch, whenever I have been on these calls, I have said that access was never a big constraint for Ilumya. And year on year, I think we have either been able to maintain or slightly improve upon the access. So I think access is not really a big worry for me as far as Ilumya is concerned. But how do you then use that access, continue to grow the brand is where I think the team and I would be focused on.
Pardon me if I'm wrong. Basically, when I see a lot of insurance formularies, I typically see ILUMYA being approved after couple of step therapy. So do you see a lot of?
Are you looking at the pharmacy side of the formulary, or are you looking at the medical side of the formulary?
I would say when you get let's say Express Script General formulary, or United Health basic formulary, those kind of things.
My suggestion is look at the medical side of the formulary. This is a medical benefit product, and I think there you will not find those barriers and constraints that you just spoke about.
Sure. Thank you.
Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. As there are no further questions, I now hand the conference over to Mr. Nimish Desai for closing comments. Over to you, sir.
Thank you. And thank you all of you for taking time out to join this call. If any of your questions have remained unanswered, do send them across and we will have them answered. Thank you and have a good day.
Thank you. Ladies and gentlemen, on behalf of Sun Pharmaceutical Industries Limited, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.